It's a very expensive, painful educational lesson to every crypto investor, right? And the lesson is don't trust air tokens, don't trust, a shady exchange, don't trust any custodian that you're not sure of.
Hey guys, welcome back to Library of Wealth. Today we have Executive Chairman and Co-founder of MicroStrategy, Michael Saylor, shedding light on the costly and painful education that every crypto investor must undergo. Saylor sends a stark warning about not trusting air tokens, shady exchanges, and any custodians you're unsure of. He also highlights issues of various congressmen, mainstream media, and senators who discredit various aspects of the crypto industry, and why their criticism of hedge funds and unregulated offshore exchanges should be measured and not to buy into the fear and uncertainty that has no merit. Let's get right into the latest interview with Michael Saylor. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
Saifedean pointed out one of his podcasts, he was somewhat gleeful about it. I'm not so gleeful, but he pointed out that everybody that trusted FTX has been wiped out and they've lost their capital, and therefore they can't keep doing this, right? Well, the crypto hedge funds have been discredited. The crypto VC have been discredited. The crypto offshore exchanges that are unregulated have been discredited. The crypto air tokens have been discredited. And they're not just discredited, in the crypto industry, right? I mean, the average person's going to look at this and say, well, how is your token different than FTT and FTX? But they're also discredited with lawmakers, congresspeople, senators, policymakers, lawyers, the mainstream media. This has been it's a massive teaching moment, a massive educational moment. There's going to be a handful of digital commodities in a properly regulated, registered world. And then the rest is like they're digital securities. So you want to sell an exchange token, or you want to sell a Solana or Cardano or Ripple or whatever these tokens are. Well, you register them as securities, and then the SEC says, well, okay, well, file these other 100 pages of disclosures and get an auditor and start publishing your audited results, right? And then trade with and sign up to Sarbanes-Oxley type restrictions. And then you'll have the same securities restrictions as anybody else. And then the last idea is like a digital token, maybe an NFT or something. If Katy Perry wants to sell a Katy Perry token, or Tom Brady wants to sell a Tom Brady token, well, there's nothing unethical about trying to sell your token as long as it was a registered token and you made the proper disclosures, like there's only ever going to be 1 million of them, and then you have to sign up to criminal civil liability if you lie, right? And then you get audited, and you have to publish a quarterly result saying, yeah, there's still 1 million, and this is what it does, and you've kind of taken yourself public and securitized yourself. So right now, we are sitting in this particular interesting part of the economy, right? The regulatory environment is got a big question mark over it. We are twisting in the wind. The SEC has not published a methodology to register a digital security, a digital token, a digital currency, or a digital commodity. That is the elephant in the room. There is, and so the reasonable, intelligent criticism of the crypto industry, of regulators, is the regulators have not given us a way to register our assets. Because there's no way to register assets, if you read the securities law literally in the United States, there is only one ethical, legal asset that you can buy and trade, and that is Bitcoin. The reason MicroStrategy only has Bitcoin is there is really only one asset which is clearly a commodity and not a security, and therefore that's the only thing you can trade. So if every crypto exchange was to adopt that stance now, they have to delist everything but Bitcoin. And of course, that's why they don't want to do it, because you couldn't trade Tether, you can't even trade Circle, you can't trade anything. They're all securities. And they are securities by the Howey test, because they're obviously investment contracts, because there is a central issuer. Now, I leave aside this intellectual debate as to whether Litecoin or some other Bitcoin fork or some random decentralized proof of work token is also a commodity. It has not been established, right? The only thing we know that is established is Bitcoin is sufficiently decentralized to be a commodity.
Saylor goes on to say that there will only be a handful of digital commodities in the future, while the rest will be considered digital securities. He explains that if a token such as Solana, Cardano, Ripple, or any other exchange token is registered as a digital security, the SEC can demand the filing of 100 pages of disclosures, the appointment of an auditor, and the publication of the audited results. These tokens would then be subject to the same securities restrictions as any other asset. Saylor says there's nothing unethical about selling one's own coins as long as it's a registered token and proper disclosures have been made.
If I'm arguing for the crypto industry, I would say the regulators need to give us a way to register our assets, and then they need to give us a path forward. There are two paths forward, Archie. There's a regressive path forward, and there's a progressive path forward. The regressive path forward, the most conservative, is you can only trade digital commodities, and I'll designate Bitcoin, and I might designate 3 others. And maybe I'll designate a stable coin issued by a publicly traded company in the US or an FDIC insured bank. Okay, that gets you to about 6 to 12 assets that can be traded on any kind of digital exchange in the world, right? That's the regressive move. That collapses 99.9% of everything. And that's the worst case if the regulators move hard regressively. The best case, the progressive move, is we're going to give you the ability to submit your stable coin as a digital currency, and you can issue a digital euro, a digital yen, a digital dollar. Tether can register. Everybody else can register. When you go through a registration, we're going to tell you what you got to do to remediate. We might fine you for something you might have done. We might tell you you have to divest yourself of some other business line, or if it's too centrally managed, we might tell you to divest something. This is just like antitrust when you try to merge 2 companies together and they say you can buy that company, but you can't have their banking branch in the UK because you would have a monopoly on banking in the UK or a monopoly on something. So a path to register would change the world.
According to Michael Saylor, there is only one legal and ethical digital asset that an individual can buy, and that's Bitcoin, as it's established as a decentralized commodity and not a digital security. He believes there are 2 possible paths that regulators can take to register digital assets and shares. One is progressive, the other is regressive. He highlights the major consequences of regulators choosing the regressive path, which could lead to the collapse of 99.9% of digital assets. Saylor's perspective is a well-structured way to register digital commodities, and has the potential to change the world. While he provides insightful commentary on the current state of the crypto industry and challenges that lie ahead, his thoughts and experiences serve as valuable resources for those looking to make informed investment decisions in the digital asset space. What do you think about Saylor's perspective on Bitcoin for 2023 and where the market is headed next? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.